I'd like to welcome all of you to our latest webinar for the Horseshoe LLC, our gold project in Cochise County, Arizona. And today we're going to go through various stages of our operation, including how to value mining projects and how ours stacks up against some of the others as well, and what's required for reporting to the authorities. We're going to go through all that today. And the next thing on the screen I'd like to talk about is our cautionary statement that we have to provide for forward-looking statements on certain assumptions that we believe are reasonable, but it's CYA to protect us more than anything else. So we're going to turn this over next to our geologist, our lead geologist here on the Horseshoe project, and that is Alex Luth. He's been out here for the last 3 years, running up and down the mountains and getting us all the information that we have today. So here he is.
Thank you, Mike. My name is Alex Luth. I'm the lead geologist here at Horseshoe LLC. Today I'm going to be talking about various aspects of the geologic side of the project. I'm going to be talking about the geologic setting, how we characterize our vein systems, the general extent of our vein systems, and I'll touch on briefly free gold versus gold unsulfides and how that applies to our project here. The geologic setting here in Southeast Arizona is a fairly simple one. All the host rock in our project area is Precambrian pinal schist. That schist is cross-cut by younger tertiary age mineralized structures. We have no big faults in the area that cause any problems with our veins, so everything's a pretty straightforward situation. We characterize the veins on our property as mesothermal systems. There are two major groups of vein systems, mesothermal and epithermal. Epithermal vein systems are in place shallowly in the crust, usually less than 1 kilometer. They are formed at lower temperatures, less than 200 degrees Celsius, and they usually have less than 1,000 feet of gold mineralization, typically with higher silver to gold ratios. Mesothermal veins are higher temperature veins. They're in place at greater depths, usually greater than 1 kilometer, and what makes them special is they can have thousands of feet of vertical extent. So we can have tremendous amounts of tonnage even from narrow systems because they can extend thousands of feet depth. The general extent of the vein systems, they are large. Our longest vein so far is over 2 miles, and that's a surface measurement. It doesn't mean that it is only exposed for 2 miles, but that's where we can see it. Free gold versus gold and sulfides is important because we have gold in the vein, and we also have gold in the wall rocks adjacent to the vein. As these fluids are moving up and down the fissures, they are percolating into the pinal schist and growing pyrite. Inside that pyrite can be gold, and we'll discuss that further when we're talking about the extraction process of this type of ore. This is a figure of our current land holdings. If you look at the blue outline box, that is a private land lease, and that's where we're currently operating. The red line indicates the extent of our BLM load claims, and the green line shows our state exploration permit holdings. To date, we have over 7,000 acres tied up. This is a chart of the top 10 gold-producing mining companies and what the grade is of their proven and probable measured, indicated, and inferred resource. What's important to take away from this slide is that everything is typically very low grade, between 0.5 gram per ton up to 2.2 grams per ton. And you see here at the Navoy Mining Company, all of those are blank because they are not required to report the proven and probable reserves. This is a chart of 17 of our mineralized structures. What's important on this chart is to not only look at the average grade, but the number of ounces that possibly are contained in those veins. If you think back to the chart we just looked at, and we were looking at grades from 0.5 grams per ton up to 2, you can see that we have some very high-grade structures on this property, yielding a healthy amount, over 800,000 ounces of estimated gold. These are 17 of the structures that I've done enough work on that feel comfortable calculating an estimated potential. Every of the 17 veins, we have over 120 of these structures on the property. This is 17. Those remaining 80 some structures could have potentials just like these. We are constantly doing exploration out on this property. And we are actively exposing more veins on the private property for grade confirmation, and also to get them ready for pilot hole drilling for extraction with the Dragon. We're using the data from the Dragon now to determine criteria for the veins that we will actively explore for and develop. And we are also planning an extensive diamond drilling program with the goal of getting measured and indicated resource estimates by Canadian Instrument NI 43101. These are some slides, some pictures of the exploration potential of the area, which is large. This is an area called Prosperity Hill. As you can see, this is a very thick unit of mineralization. There are 2 veins present in this picture, one right at my feet, and then one about halfway down. In between those 2 veins is a mineralized block of sedimentary rock that could be amenable to gold mining. Windy Canyon is a very wide vein. You can see there it's around 6 feet width. This is a picture of one of the veins in the Moonlight area. In the Moonlight area, we have 7 or 8 structures just like this one, stacked in a row. This is one of the veins on the Glory Ridge area. This is one of the larger veins, but there are at least 3 others that intersect this vein. Silver Camp Canyon is an area with high-grade silver mineralization as well as high-grade gold mineralization, and it may represent some large bulk mining targets. These are 2 veins that don't have names, and they represent really the upside potential. There is many, many more of these unnamed veins out there that we just need time to get back to explore and develop them into targets as good or better as the targets we're working on right now. In conclusion, we have over 7,000 acres controlled by Horseshoe. We have the mineral rights to all of those. We have well over 100 mineralized structures identified on every single one of those areas. As we stand right now, we have over 800,000 estimated ounces of gold in the ground coming from multiple targets. We're currently developing the upper and lower adit vein system with plans to extend that into the other lands that we control. As you can see, with over 100 targets, we have world-class exploration potential here, and we are sure that we will continue to make discoveries as we get out and put our boots on the ground. I'm going to hand the microphone over now to Zachary Lapointe, and he'll discuss mill function.
Thank you, Alex. I'm Zach Lapointe, geochemist working on the Horseshoe LLC project. I'm going to talk briefly about our mill operations and how we extract product from bulk ore. So, as Alex mentioned, there are 2 forms of gold in our ore, those being free gold and gold bound in sulfides. So the free gold extraction process is pretty straightforward in the sense we can extract free gold by mass in the Nelson concentrator and shaker tables, what have you. The little more involved process is in extracting sulfides. And here I've got a picture in the upper right-hand corner of a thin section. And this image here is taken from a piece of our rock or ore. and you can see the image in the upper right-hand corner is a sulfide mineral. This one is specifically goethite. And inside of this red circle, you can see gold inclusions, and that is why we aim to extract the sulfide minerals from our ore. And we can do this with froth flotation. And this works because sulfides are hydrophobic, and if we introduce a ore solution into a float bath system, sulfides will adhere to the surface of air bubbles, creating a froth which we skim and collect, which is our sulfide product. So that's how we extract sulfides bearing gold from the ore. So I'll walk you through our mill workflow now. Again, our mill is a sulfide froth flotation system, and we deliver ore from our project area to the mill site via truck, where we introduce our ore and water into a SAG mill. This is where the ore undergoes 20 to 40 minutes of grinding so we can reduce our ore to a 180 mesh particle size. And the first step in our processing after the SAG is to introduce our solution into the Nelson concentrator. This is where we extract the free gold, the easy to get at gold, which we test in our laboratory facilities for our concentration of gold and silver in that material we collect. After our solution and our ore has been passed through the Nelson concentrator, we feed it into a reagent tank. In this tank, we mix our solution with reagents, 3 different reagents, which increase the hydrophobicity of our sulfides to result in enhanced recovery in our 2 flotation tanks. We have a roughening cell and a thickening cell. The sulfides, after being skimmed from these 2 cells, we move to a thickener. We remove processed water, which we recirculate through the mill's operations, and we collect sulfide. And again, we can also test this sulfide concentrate with our laboratory facilities. So now what I'm going to do is I'll play a video so you can actually see our mill and the componentry we use to process this ore. So I'll go ahead and play that video.
Welcome to the Horseshoe LLC Materials Processing Facility. We are located in the heart of the Luzena Valley, just downslope from our project area in the Dos Cabezas mountain range. Our mill is a 400 amp froth flotation circuit system capable of processing 100 tons per day of ore material. From ore to product, I will walk you through the mill's workflow and briefly explain each piece of integral componentry we employ to process our material. Let's begin with the ore. The ore we extract from our project area via thermal fragmentation is loaded into a haul truck and delivered here, where it awaits processing. There are 3 primary constituents in our ore, those being silica dioxide in the form of quartz, sulfide minerals, and free gold. Our mill is designed specifically to extract sulfide minerals and free gold. The first step in processing our ore is to reduce the particle size down to a 180 mesh. This is similar to the consistency of flour, if you will. In order to achieve this, we employ the SAG mill, a large blue cylindrical chamber to my right, which is filled with various sizes of steel balls, ore, and a solution of water. We feed the SAG with our ore by delivering ore to the blue hopper, which is fed up the conveyor system into the SAG mill. Within 20 to 40 minutes, we achieve the consistency necessary to continue processing our material. When we have achieved the accurate particle size in our ore solution, we then discharge from the SAG into the cyclone manifold. From the manifold, we send our solution up to the 2 cyclones, the 2 yellow cones above the SAG mill. The cyclones can either feed the solution back into the SAG mill for further grinding, or feed the solution into the Nelson concentrator, which extracts the most important part of our process, the free gold. The Nelson concentrator is by far the most important piece in processing our ore. When we opt to feed slurry from the cyclone to the Nelson concentrator, the ore is fed into the cylindrical chamber with a ribbed sleeve which spins and separates heavies, free gold. Once the entirety of our ore solution has passed through the Nelson concentrator and we have extracted all of the free gold, We then pass our solution on to the float bath system. The first step is we introduce our ore solution into the conditioning tank. Here we mix our solution with 3 reagents. These reagents increase the hydrophobicity of sulfides, resulting in an increased recovery. Once our ore solution is charged with reagents, we feed the solution into 2 flotation baths. We have a roughener cell and a scavenger cell. The hydrophobic nature of the sulfides in our solution will adhere to the air bubbles we introduce from the bottom and create a froth in each cell. We collect the froth and send it to the thickener to remove processed water. It is important to collect sulfide material because a sufficient amount of gold is bound inside the sulfides. Once our solution is passed through the flotation circuits, we are left with 2 materials, one being sulfide concentrate and one being our tails. We plumb both of these solutions into our thickening tanks, the large blue tanks sitting on top of the steel platform. In each one of these tanks we add a small amount of polymer flocculant to increase the settling speed in each. We plumb the processed water to a processed water tank where we recirculate the water through the mill's operations. The sulfide concentrate is plumbed over to a vacuum filter disc pad where we remove any remaining moisture in the product. Lastly, our tailings materials are plumbed to these 3 2,500-gallon tailings tanks. The tails materials are staged here where they await transport and disposal. In conclusion, we are near to completing our froth flotation circuit system designed specifically for the ore in our geographic region. This mill is an extraordinary asset to our operations base, and I look forward to seeing you all again for our next operational update. My name is Zach LaPointe, wishing you well from Cochise County, Arizona.
All right, and that concludes our segment on the mill and processing ore. I'm going to hand the microphone off to Adam Zimmerman, who will be discussing our laboratory facilities and testing procedures.
Thank you, Zach. Managing this precious resource is very important. Again, my name is Adam Zimmerman, and I will be discussing these laboratory sample test procedures and processes. During every phase of exploration, development, and material processing, it is necessary to perform precious metals analysis on all rock samples. This process allows us to accurately analyze all the rock samples and analyze the sample solution on an atomic absorption instrumentation. The fire assay laboratory provides on-site testing to measure grams per ton of gold contained in all phases of material recovery and sample analysis. This includes outcrop sampling, diamond core drilling, thermal fragmentation, and also mill processing. I'll play a brief video of the laboratory processes that are used to determine grades contained within our gold-bearing quartz vein complex. This allows us to validate and also target exploration and development activities into the most attractive and economically viable areas for project expansion.
We'll begin the video here.
You can see here the drill core that was recovered during our 2015 diamond core drill camp. This is contained in our on-site storage facility and houses crushing and grinding staging areas for all rock samples. We're looking at the core recovered here, which is our targeted mineralized quartz vein. To begin grade analysis, rock samples are crushed and pulverized. Material must be brought to a -180 mesh to make sure every sample passes grind size and ensures the proper full liberation of free gold. And this machine helps us do just that. The pulverized material is referred to as pulp, which is what we're looking at here. It is weighed out on a precision scale and then mixed with a series of reagents. As this process is demonstrated now, what the reagents do is lowers the melting point of the pulp and facilitates the complete extractability of gold and silver into lead and a lead alloy. The reagents are mixed and placed in a lead crucible, which we'll see done here in just one moment after the mixing is done. The crucibles, as we see being placed here, go into an induction furnace at 1100 degrees Celsius for 1 hour for a reducing reaction to occur. This will pull all of the gold and silver into a lead button. Crucibles are then poured into a concentric mold in order to separate the glass from the lead button. As each sample is processed, you can see the black slag layer and the lead button. The lead buttons are cleaned thoroughly and then weighed to ensure proper sample size. The lead buttons are then placed into bone ash capels and loaded back into the furnace at 870 degrees Celsius. This oxidizes the lead and reveals the precious metal. The bead that we're looking for will be shown here in just one moment. Here you can see capels coming out of the oven, will be placed into the oven, and this is where we will identify the small bead. These beads are gold and silver. The bead is taken from the capel and placed into a Teflon container. It will be digested by a mixture of acids. Acids are added to these vessels until the entire bead is dissolved. The remaining liquor is now filtered and ready for analysis. To analyze these solutions, we first prepare a standard solution. This tells our instruments a range of values, so it will properly tell how much gold is in the solution. These tests achieve very accurate results using state-of-the-art equipment. As the samples are prepared in our on-site testing facility, we utilize an OES, optical emission spectrometer, an atomic absorption spectrometer, and also an ICP, inductively coupled mass spectrometer. For our purposes, we use the industry standard atomic absorption. Here you can see the burner. It is an acetylene gas torch that atomizes the elements in solution into a free gaseous phase, reacting with X-rays emitted from the gold lamp. Care is taken to obtain the proper correlation coefficient to ensure our analysis is very accurate. Again, our on-site lab provides us with fast turnaround time for all of our analyses. That concludes my segment. I'm going to pass it over to Mike Pilgrim, and he's going to take us into the next section.
Thank you very much, Adam, Zach, and Alex for a good presentation that they put together for you all to see. What we've done is we have developed the infrastructure necessary to do the work that's required to go through the entire life cycle of a mine, from exploration to eventually the final closure of the mine itself. We're going to discuss that today from a finance and accounting aspects and how you value mining properties. In our case, in the industry, what we've determined to date is how to structure these things properly, because our ultimate goal is to go public with this project. And we started out on a private sector basis primarily to avoid having to maintain the market for the stock, publicly traded at this stage especially. I'll get into that later regarding where we've gone from the industry to where we're at today and regarding to the price of gold in the mining sector for stocks. First of all, we started out as Micron Resources Corporation. We established that back in 2005. And my partner and I, which is Boyd Branch, he and I have been to Idaho, Colorado, Nevada, and of course here in Arizona, regarding looking for properties that would meet the criteria that we need to make a successful offering and make a big payday for everyone involved. And when we did this, we acquired, when we came down to Louisiana Valley, Arizona, we did acquire AU Consolidated in 2007, and we acquired the 1,561 acres where our sample prep building, our laboratory, and our mill plants currently located. We are blessed with lots of water and power through that location. We then added two other companies. One is Micron Recovery LLC. And right now we use that entity for all of our mine employees and equipment for asset protection purposes for the holdings of the land that we own and all the other assets of the company. We then established Caldera Gold Reserves LLC. We then established Caldera Gold Reserves LLC. And Caldera Gold Reserves LLC was attracted to raise some additional capital back in the 2010 timeframe, 2009-10 timeframe, which got us off to a good start regarding exploration. Micron Resources owns 74% of Caldera Gold Reserves, and eventually will increase its holdings to 79% from there once Caldera Gold Reserves investors get their money back. The next phase is, I wanted to show you regarding our corporate structure. AU Consolidated, who is 100% owned by Micron Resources, is also the managing member for Caldera Gold Reserves and for Horseshoe LLC, which we established in 2014, which I'll get to in a moment, and also for Micron Recovery LLC. And Boyd Branch is the president of that. As you can see, I'm the president of Micron Resources, and it just refers to roles between vice president and president there at the top. Horseshoe LLC allowed us to title all of our mineral claims in the BLM, state lands, and the private lease in the Dos Cabezas project. And that's we did that for one reason primarily, is to keep the assets all in there, and also the monies that go in there, it'd be equal dilution between Caldera Gold Reserves and Micron Resources Corporation shareholders. First, I want to talk about one of the big aspects that Alex has already covered is the resource. The resources are very critical when you're talking about any type of the oil and gas or mining operations, and that is, do you have the goods? One of the things that we discovered is, I always ask myself, was why were we so lucky? The reason why we were so lucky is that primarily in Arizona, it's a copper mining area, so we're surrounded by mines, as a matter of fact. The Freeport-McMoRan-Morenci mine, 45 miles directly to the north of us, you can see at the top of the peak of the Dos Cabezas very clearly from up there on a clear day. And but they're primarily copper mine. They have a little bit of gold and silver, which is always attributable to copper mining. We have mines to the west of us, to the east of us, and of course down south and all the way into Mexico. So this is a traditional mining sector area, but this was overlooked. As a matter of fact, if you look at our geology consultants, Dr. Campbell and Dr. Virgil Luth, Dr. Luth told me, I wanted to share with you, since it turns out that you guys may have discovered a new gold mining district, if you will, regarding because it was overlooked because nobody found any copper in the area. And also the way the land is owned. We have a combination of private land along with state and federal land, but it's the private landholders that allowed us the capability, because for years they didn't let anybody on their property, and they're old time, old west cattle ranchers, and they didn't let anybody on their property, so nobody had access to that at that time. I do want to mention that Dr. Campbell, Dr. Luke were the ones that were responsible for initially finding this property there in the Dos Cabezas and introduced us to Alex Luth. Alex Luth is our lead geologist, and later we brought on board Zach LaPointe, who's both a geologist and he's a geochemist as he went through the demonstration for you on the mill plant. And Zach DeLuca, also as well as a geologist that will be working in the field as well. Adam Zimmerman has also a degree in geology. You saw his curriculum vitae on his presentation on the laboratory. And right now, those two, Adam Zimmerman and Zach LaPointe, are working to get the reagent mixture correct in the mill plant as we're going to start up our plant next week. By the way, the date of this whole presentation is February 24, 2017, and we expect next week to begin doing our testing of the mill plant and producing gold. The engineering support, that's going to be critical too. The biggest one I want to mention right away is a lot of our data that we get on cost is from Infomine, which is standard in the industry. We get this data from a lot of different mining companies in Canada and the US. And even right here locally in Arizona, it tells us what the cost for labor is. It tells us what the cost to operate equipment, all the way down to oil changes and maintenance on a per hour basis, what it costs. So that's where we get a lot of our cost data. But Bison Mining and Construction out of Regina, Saskatchewan, Canada, is probably in North America one of the best underground mining and construction firms there is. And we have to know one of the senior vice presidents of that, and they're very interested in helping us, because we will have to go underground on a portion of this property out here. It's quite vast, and as Alex pointed out, the deposit's very deep. In metallurgy support, the big one is Hazen Research out of Golden, Colorado. They did all the testing with our reagents that Zach and Adam and also with SciTech and BASF Chemicals have introduced us to get the highest recovery, if you will, from both the free gold and primarily the sulfides, as we discussed earlier in the mill plant video. Those recoveries in the industry is anywhere from as low as 80% and as high as maybe 96%. Ours is in the low 90s is what we're getting in the way of recovery for sulfides, which is very good, by the way, in terms of the industry. Our assay labs, besides our internal lab, we have to get assay labs to confirm what we've done. And that would be Skyline Labs in Tucson, Arizona, and the University of Mexico Geochemical Laboratory, Earth Planetary Sciences, there led by Dr. Mehdi Ali. In our legal and tax accounting section, it's very important to us as a senior management for Boyd and I, is to have audited financials, tax returns filings on time for all the investors, as well as our securities law firm. But also I want to point out that the environmental and regulatory compliance area, which is very critical for one of the things we're going to discuss today, is the permitting is SWCA Environmental and Regulatory Consulting out of Tucson, Arizona. These are the locals, and some of these people used to work at the state level. A lot of people in the Arizona state level 3 years ago retired, unfortunately, so they got some newbies in on as employees there in the state level that didn't really understand most of this stuff, it turned out. But now they do. But SWCA will be our go-to firm to give us and assist us in getting the mine development report and meeting with the regulatory authorities there in Arizona. This is, by the way, I should mention that Arizona is probably the third best jurisdiction for mining in the United States. That's very important to us to get through the permitting process and a professional and quicker possibility of getting this thing completed that we require. And I would say that right now the #1 state is Nevada, followed by Wyoming. They're probably tied for #1 spot actually for that area. The next section that I really wanted to get into is the cost to produce. Everybody's always asked, well, what does it cost you to produce gold? Well, I'm going to give you some parameters right now on the cash cost, and then we're going to go into another area that is now being required by the major companies and all those that are about publicly traded as well in the producing sector. Right now, for open pit cost, we also included a 15% swag, or if you will, any unknown cost components that may crop up that bite you. But right now we're looking at, for open pit, around $328 an ounce for conventional mining. That's where we scoop, we haul, we crush, we grind, and feed it into the same plant that you saw in the video, and get the free gold, and then also we will get the sulfides that carries the gold and silver and get that extracted that. Underground's more expensive. We're estimating right now that it will be about $488 to up to maybe $528 an ounce underground. It costs more to go underground. We have a lot more rock and resources that are non-bearing gold and silver that we have to deal with, and dealing with the tailings that's responsible for that. And right now, for all-in sustaining costs that we're going to go over in detail, is approximately $565 an ounce for both the underground and for open pit. So I'm going to go into what happened in 2013. The World Gold Council is an independent group that wanted to change the parameters because cash cost doesn't really tell you anything. I can tell you that cash cost is that low. Matter of fact, a lot of companies did during that time frame in the mining industry, but they wanted to have more parameters to show the real cost of mining. And this disclosure is required in order to provide further transparency into the cost of producing gold and silver. And this new guidance focuses on all costs incurred in the complete mining life cycle, from exploration to the closure of the mine. And the two different parameters, all-in cost, includes everything for the entire life cycle of the mine, but the all-in sustaining cost is an extension of the existing cash cost metrics, which we're going to cover real briefly here. It incorporates cost of sustaining all production involved in not just your cash cost. One flaw in the reporting system, though, that the World Gold Council left out is the all-in cost. For all-in cost only, includes the additional all-in sustaining cost, but it does not include CapEx, which is capital expenditures for mining projects. To me, that's a big difference, because if you look at what Alex Luce showed you earlier in the top 10 mining companies, those low grades, think about this. If you got a grade of just 1 gram per ton, it takes 31 tons, actually 32 tons, probably closer to that, to get 1 ounce of gold. That's why you see these big haul trucks, and some of these plants are up to 100,000 tons a day to process to make it economic. The reason why I mention that is the real cost of mining. And as a matter of fact, the latest numbers I had, if you would include back in 2013 when they passed this, they went back to 2012. They said that the average for the top 10 major mining companies, I just had on the screen earlier with Alex went over with you, was $1,784 an ounce. Price of gold in that particular year, after it hit a high in 2011 of $1,911, it was right around $1,500. So they were already, it shows that cash, I mean the guidance that they're talking about, that a lot of those did not make any money. What is involved in the section regarding all-in sustaining cost? Well, real quick, I'm going to go through these, so I don't bore you to death. Is on-site mining costs, the general and administrative cost on-site, that would be your mine manager and payroll and that type of thing. Obviously our royalties and production taxes, if there are any. I will mention that on the BLM properties, there's currently no royalties that's owed or production taxes. On the state land, usually it's around 3%. That's negotiated after we get our part of our mine development review plan, which we're going to go over here in a moment. And also on the state land, on the private land, it is 4% royalty on the private land currently. With regard to hedging, we're not going to do that right away because I'll get to that in a reason why later on our forecast for gold. But realized gain and losses on hedging due to operating costs, it's big boys do. And I might say that in the late 1900s, Barrick was the darling in Wall Street. They hedged, the other companies did not. And when the price of gold was $250 an ounce, the cost of $300, they were able to make close to $350 to $400 an ounce due to hedging. However, they lost over $1.5 billion 5 years later when the price of gold shot up to over $600 an ounce. So so they hedged themselves almost out of business. Community cost, that really is related to the current operations, and we're talking about in foreign countries where you have to keep the natives from being restless, if you will. And we don't have that issue here in Arizona so far. I hope we don't. Permitting costs related to current operations, that's always a continuing situation because we have to update every year, and we may have to change our permitting parameters based upon what we find further exploration. Third-party smelting, refining, and transport costs. This is the cost that we'll have to do initially on smelting. We'll be sending hopefully to the Freeport-McMoRan facility up in Miami, Arizona. Yes, Miami, Arizona, not Florida or Oklahoma. Miami, Arizona, which is their major smelter operation. Because of the Clean Air Act, etc., smelters are hard to find, and particularly from the mining companies themselves. We have to go through third-party laboratory tests to make sure that we're not providing them anything that can cause any issues with regards to the Clean Air Act. Stockpiles, product inventory write-downs. As you see stockpiles by the plant, those are actual assets. Those are considered inventory, just like any other inventory in a manufacturing operation. Byproduct credits, for example, we've been talking gold, but we also have silver as other byproduct credit that will be added to that asset category. Operational stripping cost. This is the stripping cost we have to get to a vein or to the resource itself. And that is a cost. That is part of mining. Corporate G&A costs, that's everything from Boyd and I to our attorneys and all our accountants and all the accounting that has to be done and reporting to the agencies, as well as to you as our investors and potential investors. Reclamation and remediation, that's accretion and amortization. What that really means is that we've got to put together, once we get this permitting and we go through this mine development review plan, we'll have a better idea what those costs are because those are all negotiable, believe it or not, with the regulatory agencies in most cases. Obviously, exploration study costs are ongoing and sustaining. That will always continue, as well as our lab costs. Capital exploration costs. These are costs that we go through as part of when they start to capitalize, we capitalize equipment that we are using in that process. Capitalized stripping and underground mine development. We talk about the non-bearing gold that we have to deal with, and also the tailings impoundment that we have to go through. Capital expenditures in general. That's in the all-sustaining cost. But for an all-in cost, it includes community costs not related to current operations. That could be, again, that's primarily the foreign sector, and permitting costs not related to current operations. That would be things like, and with regard not to direct current operations, but like we have dust out here. So we have to worry about dust containment. We have to worry about the water, any water that falls, nothing gets on the ground. We have to deal with those issues. Reclamation and mediation costs not related to current operation costs, which is additional cost. Those all are included in all-in cost. The excluded costs, believe it or not, is income taxes, which I found interesting. State and federal, working capital, financing costs such as interest, and even the cost of going public are not included. And asset acquisitions or disposal, business combinations or mergers, acquisitions, impairments on non-current assets such as inventory write-down, the price declines of the inventory of what we believe is a pile of the ore stockpile. But here here's the equation you need to understand the most, what all-in cost is. All the above cost divided by the gold resources. You see, as time goes on, the more gold we find in the Explorer, that denominator, when you divide that in there, your cost per ounce drops dramatically. And also we'll have identified all the costs, but if we have more gold resources or reserves, and by the way, when we become reserves, it's when we can legally mine the property after we're fully accredited. You got a go button, you hit the go button after we get the permits all in place. They become from not resources, but now reserves. So I wanted to go through this because this is what some of the questions we get. So if you look at just the current situation here, as Alex mentioned, we just scratched the surface in exploration. Potential contained ounces without gold, silver is approximately 895,000 ounces. We know that we have to do the work exploration that Alex just covered, that we have substantially believe will increase our ounces dramatically from there. And I want to mention about this, something that's very important. For mergers and acquisition purposes today, the major mining companies, when they're looking at a possible acquisition, they're looking for two things. They're looking for how many ounces do you have? And they usually require 2 to 3 million ounces of resource or proven probable reserves in place. If you were to buy this, I've had questions on this in the past. Why don't you sell part of the property that has ounces? Well, you're not going to get paid much, guys, because what they're going to pay, the average right now is between $25 as of 18 months ago to as high as only $120 of what you find in the ground in gold and or silver. If it's a silver mine, they require a minimum of 100 million ounces in the ground, even get to look at, to even consider doing a merger acquisition. So what we're tending to do is to increase the value of everybody's investment in this company is to increase ounces. That means we got to spend money for exploration. It costs money, it takes time. And now that you saw the whole process that you saw earlier for what Alex covered and what Adam covered in the lab, and then finally the real grades, if you will be what's run through the plant, because that will be the ultimate determination as well. So we'll now have all the pieces in place, guys and girls, to see what the value of our company is and how to be going up every day that we're out there exploring. So all-in cost includes all the above costs, total resources divided by all costs per ounce. And the big mining companies, besides those ounces in place, they want a mine life of a minimum of 10 years or more because of the infrastructure they got to build in place. All the buildings that you see that we have out here, the plant, etc., all those costs has to be paid back through when you depreciate it, which is non-cash. That's why cash costs are important from a cash flow standpoint, but you have a lot of other costs that are not included in there. The next thing I want to cover is the Arizona Mine Development Report and commence before we can convince, and also we're going to be working through the exploration process. We're going to enhance our accuracy in computing our cost metrics as a result of this. So we can determine all-in sustaining costs, all-in cost proven. We're going to obtain permits and approvals for full-scale mining on our land package. And this is what the state of Arizona requires in the Mine Development Report. It composes of 3 major areas that are addressed. Part 1 is the technical analysis, excuse me, the geological evaluation and economics. Part 2 is the environmental assessment. That's both air, water, and ground, including we have to have Indiana Jones, known as to go out there and to find if there's any Indian artifacts or dinosaurs. And I hope they don't. I don't think they will. But I say that jokingly because my partner Boyd says, no, he removed it all already. Jokingly, of course. Part number 3 is operations and planning. And this is where the mine operation plan comes into place. We're going to give them the entire plan of how we're going to do it, all the haul roads, all the points that they need to be aware of, and that will have to be upgraded and updated possibly every year, depending on what we be changing changes. And of course, finally, the reclamation plan and closure plan. That's where we didn't determine what the bonds are required or cash deposits required in the event that if somebody should go out of business, or if we're done doing the entire operation, let's say 20 plus years from now, we then have to be sure that we implement that plan. We have the capital to do that. Also, as I mentioned, this moves on to the next phase of permitting that's required, and we will expect that over the next 18 months, which we expect to see, which I'm going to get into the lower prices for gold and silver before the next resumption of the secular gold market for these two metals. You see, 2001, the price of gold hit $256 an ounce and went to a high in 2011 of $1,911. That was the top. Gold stocks, mining stocks were all overvalued, and they fell. And the majority of them, including the big boys, fell 90+% in value as of December and January of December 2015 and January 2016. That's not very long ago. Today, this day of this broadcast is February 24, 2017. One of the things that we have, Boyd and I have been attending is World Economic Conferences with the Martin Armstrong through Armstrong Economics. He uses an artificial intelligence computer system called Socrates. I highly recommend that those interested should look at armstrongeconomics.com, and he has a free blog there, and he will, after the fact, because he's not going to tell anybody that's his subscribers. He doesn't have a newsletter or anything like that. He doesn't do that. But we also, being members of the economic conference, we get updates periodically from him on what the markets are doing. I will tell you this, Martin Armstrong, who's been doing this for about over 30-something years, he forecast in 1985, at 2016, the election that we just all experienced would be the most disruptive in American history, and that both parties will see an outsider come in that will disrupt and possibly improve, we hope, the situation in this country. And that was back in 1985, the first conference. And I bet people who were at those conferences that remembered that. They didn't worry about it in 1985, but they didn't know they'd still be alive in 2016. So they didn't do that in 1985, but they didn't know they'd still be alive in 2016. So they didn't really care about that at that time. But I will tell you this, he won the year before the Currency Trader of the Year. He, last year, in late December, early January, predicted that the closing high for gold would be 1362. He was off by only 23 cents. And by the way, he also within 1 point of the S&P 500. So we've been following his methodology and cycles. He's a cycles guy. He's not fundamentals, because fundamentals are what I've learned over my years in the finance world and Wall Street are worthless. It's what the perception is, and it's all about confidence. And what I'm going to tell you is, and what he's told us, I'm going to share with you, is that what we're going into is a sovereign debt crisis. The sovereign debt crisis is what's going to drive everything. That includes the currencies and the dollar. The dollar is king right now because Europe's in a mess, and the euro will die in the next 2 years or less. The Japanese markets, same way. And you see there's probably at one time here a few months ago, we had over $12 trillion of bonds, government bonds trading at a negative. That means you got to pay them interest level when you purchase the bonds. That's one of the major problems. The 5,000-year low in interest rates, that cycle's now bottomed in July 1st last year in the U.S. markets. Martin looks at this globally. He has offices in Tokyo, Beijing, Hong Kong, Singapore, Dubai, London, Frankfurt. His office was in Princeton. He's now moved to Tampa, Florida. He is very well connected and throughout the world, and he looks at cash flows because everything, we're all get together now globally. And as a result, one of the things that's going to be happening here is that we're going to see, and today we did break 1,256. We closed at 1,257 today. And we needed to do that if we were going to go to the next level, which is $1,306 on the gold price. And it needs to do that. It's going to break that to ultimately retest the 1362 high of last year. We've had 4 false moves to the upside in gold since 2011. We're about to have a 5th one. It appears that right now that Socrates, his AI model, is showing that by the first quarter of next year, in the first quarter of next year, we will see a new low. And those lows are anywhere between 875 and 924 an ounce on gold. That's necessary. It's like a trampoline. The higher up you go up, the more you push down, the quicker the return back up. We will return to new highs. And once we break 2,000, his model shows that we will never, ever see 1,000 or 2,000 on gold again. It will go much higher than that. Because at that point, the sovereign debt crisis will be far more severe, the political situation. And yes, he predicted even the civil unrest cycles and World War III will also be included in all these cycles. I wouldn't bet against him. He's been very accurate. His models have been accurate for many years. His former clients were Ronald Reagan and Margaret Thatcher in his younger years, and he's outperformed all the other hedge funds dramatically. Matter of fact, he won Hedge Fund Manager of the Year when he was managing money in 1999. He made that a distinction as well. He did not no longer continue to take money from outside investors. He does not manage money, etc. So anyway, I would advise you to look at arbitrageeconomics.com, and that's the cycle that we're following. Not economists, not Wall Street, not the talking heads on CNBC, because they don't know what they're talking about. This is the real guy that knows what he's doing, and we followed him, and we knew that we were in this cycle until 2011 down. We took advantage of that to do exploration out here, and now we're going to ramp this up because we want to be able to begin on the upside, and that is our exit strategy. We intend to then go public during when these prices of stocks go up. And I will tell you, if you look at it back in the 1930s, when gold, like Homestake Mines, went up over 1,000%, yes, and including a depression. It goes up during depressions big time. Because the problem is that in the 1930s, what you don't hear about in America is that the European governments defaulted on their debt and we bailed them out as Americans in the 1930s, which exacerbated the depression worldwide. So with that being said, we're going to be seeing defaults on sovereign debt and eventually on our country. We're going to be seeing that as well. So that's why we're very bullish long term. We're very negative long term. Martin's taken a lot of heat from gold bugs because now he's been right, but he kept saying it's going to go lower, and it did. So now that it turns around, maybe we'll find somebody that wishes they didn't that they were into bonds and stocks again. Anyway, the current financing that we're raising is a $15 million financing. And I wanted to go through and mention to you that that financing allows all these slides that I'm showing you to occur. We got to continue to keep our phenomenal personnel and our infrastructure in place. And we want to continue not just exploration, but also production on a minimal basis until we get fully permitted, that we'll be able to reduce the cost of our operations dramatically during that phase. This is a picture of this new technology that I wanted to also mention to you is the thermal fragmentation policy, thermal fragmentation technology that we're using. This is from Nippon Dragon Resources. This is what they call the Dragon, which is using this thermal fragmentation out there and up there on the mountain that we're now doing. You can see what both the geologist and the people that's running this machine. What it does is right there is the president of Deadpond Dragon Resources. He is measuring the amount of it just simply steam that's coming out of the thermal fragmentation. It gets very hot down there. It takes over a day usually to cool down the ore that's been fragmented to small pieces about the size of your thumb, or even less than that, versus using blasting and crushing and grinding unit. We're looking at now the economics of using this on our narrow veins, as Alex showed in other slides, how big the other veins are. That may require to use conventional mining methods. But we want to look at reducing costs, being environmental, and making this a low-cost mine as possible. And as I mentioned, all the funds from this offering are going to be used for the continued education, exploration, and increased investment values, additional testing of the thermal fragmentation technology that we've entered into a 3,000 ounce program with them to see how that works for us and for them. And they have got over 20 people, 20 different companies, coming out to review this technology in the mining sector from all over the world during this particular phase. That's why we're doing above ground versus below ground. Infrastructure enhancements, and also retire what little debt we have left in the company. I also wanted to point out an important factor. Boyd and I have over $4.5 million invested in this project, personally, through our trust. I'd like to point that out because most of these mining companies are just Johnny paychecks. They're in it for the paycheck. They don't care if they make money really at all, as long as it's even during downturns. A lot of these companies in the last 5 years high-graded their mines, and they're now down. As a matter of fact, if you sold this slide earlier, the top 10 producing companies in the world, their grades are even higher. So you're seeing grades throughout the industry falling dramatically. And by putting our money in this, we know that we have confidence that we have the goods. And I just wanted to mention that because we wouldn't be doing this at our ages, especially unless we did have this capability. I'd like to introduce you to our investor relations people, which is Mike and Dan McGinnity, father and son. Some of you know him. I know them and I've done this with them, but I just wanted to mention them to you. Get any questions to contact them. And then if there's anything they can't answer, they'll get us up to us on the management side and get back to you as soon as we can. So that's the end of this particular presentation. And if you have any questions, as I mentioned before, please contact Mike and Dan on the screen. I'm going to leave it up here for just a little bit longer in case you write down these email addresses and phone numbers. We do appreciate your time to attend this webinar, and we believe that it's very exciting for us and all of our personnel that are working out here. They work very hard in long hours to make this all happen. And I want to thank Adam and Zimmerman and Zach LaPointe for putting this presentation together in their spare time out here working in good old Wilcox, Arizona. So I'll sign off for all of us. Thank you for watching. Thank you.